As some of you may know or you don't know, we post market updates and trade ideas on Twitter throughout the day. And in many cases, Mike, who does that, he includes screenshots of things that he's looking at. And he has started to get some questions on the tools that he's using. So we thought we'd put together this video and review some of them for you. Now, the main workspace that he looks at through the day to get a real feel for the market strength or weakness is what he calls his market internals workspace. Now, if you're following us on Twitter already, you've seen him post screenshots of this workspace. And if you're not a Twitter follower, you can look us up under @netpicks. And a while back, he wrote an article for our Informer newsletter that walks through these market internals in detail. And since we're getting more active on Twitter, we thought it would be a good idea to revisit that article, which you can see below. Now, one of the biggest transitions a trader can make is to go from a day trading approach to becoming a longer-term swing trader. Now, this is an issue that he's had to deal with over the years in his own trading. Now, when you are actively trading the market from the opening to the closing bell, taking multiple day trades, it's not difficult to have a pulse on the market. When you stretch things out to a swing trading approach, it becomes more difficult to get a feel for how strong or weak the market is. When he swing trades, he typically comes in to check the chart 2 to 3 times per day for about 20 minutes of work. Now, this is great for him as he can get into some other things throughout the day and still stay active in the markets. It can be pretty tricky to have a good feel for how strong the market is. So he uses a market snapshot approach using a few simple tools. So when logging into the trading computer, there's a few different workspaces get loaded up. Now, the first is the workspace that has all the names on the current watch list of products that he trades on a regular basis. Now, these charts include the PTU options mastery indicators, telling him where to get in and out of trades. The second workspace is what he calls his market internals workspace. Now, if you've been trading the markets for any length of time, you know that it's not enough to just look at the values of the big index products to see if the market is up or down. Now, oftentimes there's more going on under the hood than those numbers indicate. To further gauge the strength of the market, he uses 5 tools that can be found in most charting platforms. Now, you're going to find a link to a preloaded shared Thinkorswim platform below. If you use that, then you can just click on and take a look at those tools. So before we get into details of these tools, I want to point out that he does not place or manage trades based on these tools. They're simply there to stay up to speed with what's going on in the overall market without being glued to the computer screen all day long. So the first one is UVOL. It's short form. Now, the first tool is a chart that plots the amount of volume going into stocks that are positive on the day versus the amount of volume going into stocks that are negative on the day. This gives a ratio that helps to gauge how strong the market move is for that day. Now, for a strong positive trending day, we want to see this ratio at a value of at least 2 to 1 positive. This means we have 2 times the amount of volume going into names moving higher on the session when compared to volume going into names moving lower. So the opposite's true for a weak session moving lower. In that case, we want to see at least a negative 2 to 1 volume ratio, meaning 2 times the amount of volume is going into stocks moving lower on the session versus volume going into stocks moving higher. Now, this ratio helps lay the groundwork to see how strong the move higher or lower has been that day. Now, typically, if we see a volume ratio of plus or minus 2 to 1, that means we're in a strong trending day where it's going to be difficult to get a big reversal. Now, the advanced decline line. In Thinkorswim, this can be looked at by using the symbol ADVN-DECN. Now, this chart shows how many names are moving higher and lower on the session on the NYSE. This value is shown on a price chart, and it's constantly updated throughout the day. Now, when this number is plus or minus 1,000, that means the market's in a strong trend for the day, and it's going to be difficult to get a reversal in the market. For example, if you go in at lunchtime update and you see the S&P 500 is down 15, that immediately has them thinking that the market is getting beat up that day. But is that really the case? Well, by looking at the advanced decline line, you can get a better view of how strong the selling is. So if that value is at negative 1,500, that means there is a strong selling across the board. And if that value is only minus 500, then that says the market's lower, but it's been more of a mixed market at that current time. So if the value is only plus or minus 500, then it's not going to take too much to get the market to reverse in the other direction. Now, the NYSE tick. Now, in Thinkorswim, this can be looked at by using the symbol $TICK. This is a tool that tells you at the current moment in time how many stocks are trading on an uptick versus how many stocks are trading on a downtick. Now this is tracked on a 15-minute chart throughout the day. This can be a very short-term indicator that's handy for day traders, but it can also be a powerful tool for someone who's trying to quickly see if we have hit any extremes or not throughout the day. So what makes an extreme on this tick chart? There's a few price levels that are marked on the chart to easily read where we've been that day. We marked the 0, the plus 400, the plus 800, the plus 1,000 levels on the upside, and the minus 400, minus 800, minus 1,000 on the downside. Now, if we reach plus 1,000 on the upside, that means 1,000 stocks on the NYSE are trading on an uptick at that moment. A negative 1,000 reading tells us 1,000 stocks are trading on a downtick at that moment. Now, when plus or minus 1,000 is hit, that indicates a near-term market extreme. So when we hit these overbought or oversold extremes, we'll oftentimes see the market pause or pull back slightly. Now, when you get multiple extremes of plus or minus 1,000, that indicates a very active market. Now, on a day when we're stuck between plus or minus 400, that indicates a very slow and decisive market. The SPY 5-minute chart. It's a very basic pivot point indicator that can be found in most charting platforms. There's no custom settings being used on the pivot points. He also loads up what's called the VWAP. Now this looks very much like a regular moving average, but it's much more than that. The VWAP, the VWAP, it's the volume weighted average price. It's calculated by dividing the dollar value of transactions by the average volume. The VWAP can oftentimes act like a magnet, attracting price towards it. So when we get extended away from this level, oftentimes we'll see a retracement back towards it. On a slow moving day, you'll oftentimes see price action hug this level throughout the entire day. Now the pivot points and this VWAP level gives an idea of support and resistance levels that might influence things going forward. Now here you're going to see a snapshot of October 1st, the VWAP, on the SPY 5-minute chart. You can notice how it draws price to it in both directions throughout the day. Now this can be a very powerful tool when trying to figure out where the market is headed next. Now the VIX has a market volatility gauge. We look at volatility quite a bit as option traders because we want to know if options are cheap or expensive. A VIX in the 11 to 13 range is an extreme on the downside, meaning there's very little fear in the market, and as a result, the options are very cheap. So in this case, we'll be buyers of options premiums. A VIX reading in the 20 to 25 range is an extreme on the upside, meaning there's a lot of uncertainty in the market, and as a result, options are more expensive. In this case, we'll be sellers of options premiums. The VIX just helps form an opinion on how long you can expect to be in a trade for. A high VIX will typically mean a very short-term trade of 1 to 3 days, and a low VIX reading will in many cases lead to longer-term trades of 2 to 3 weeks. These tools used together can help you quickly take a look at the overall strength or weakness in the market. Now, it may seem like a lot to look at, but when loaded up as a workspace, you can look at these charts and in 60 seconds have a feel for what you missed that day by being busy with other things. Like we mentioned earlier, you're not looking to trade based off of values or trends off of these charts. Okay, they're strictly used to get a quick pulse on the market. They help free up your schedule so you don't feel pressured to be in front of the screen all day long. Now, swing trading is hugely beneficial because you're in and out in 20 minutes a day, but you also have to realize that you're going up against traders that are looking at the markets all day. So it's really important to use tools like the Market Internals workspace to dig in and see what's really going on in the markets instead of just looking at the overall index values. So if you're a Thinkorswim user, here's a link that you can download the Market Internals workspace. So start using these simple tools in your own trading, and I think you'll be surprised at how much better your understanding of market strengths will be. And you know what? If you have any questions at all, feel free to send Mike an email at mike@netpicks.com.